My name is John Dowdy, and I'd like to give you a quick market review for the week of May 17th, 2013. If you'd like more data, you can come to my website, www.superchargedretirementIncome.com. I call this review "The Bulls Keep Running" because the bull market just doesn't seem to want to stop. It actually is picking up steam. To see how this is, let's look at the SPY, which is the S&P 500 ETF. This is the daily view of the SPY. And as you can see, we reached our target that we talked about last week of 166. In fact, we reached this on Friday and went over a little bit above it to close at around 167. We also see that we broke out of the trend channel that has been in place since last November. What does this mean? Means more of the same, most likely. We'll either consolidate or keep moving a little bit higher as the weeks go by. There are no new patterns, so there's no projections that we can make at the current time. There's neither any bearish or bullish patterns, and we'll wait to see what develops. We are in the fifth wave, as we've talked about. We got 1, 2, 3, 4, 5. So we're in the fifth wave, which is usually an exhaustion wave, but this fifth wave just keeps moving higher. To get a better perspective, let's look at a longer-term time frame. Let's look at the weekly. Now, when we look at the weekly, it's very interesting because there is a new trend channel that goes from the low in 2009 to the day. And this trend channel says we could get up to the 170, 175 level before we reach strong resistance. Now, to even get an even longer term perspective, let's look at the quarterly SPY. This goes back to 1993. And as you can see, very interesting, there is 5 waves here also. There's 1, 2, 3, 4, 5. So we're in the fifth wave of a fifth wave of a fifth wave, which means caution should be exercised. We could be getting near the top. However, this last fifth wave could be extended again and go considerably higher. Note that this is an 80-point range, and we have just broken out of this range, which is very impressive. If this breakout holds, and the immersion move target would then be 80 points higher, if you can believe that. That would be to about 235. It's a very, very substantial move. So this is very important. If we can maintain the breakout, then we're looking for much higher prices. Now, it would not be too surprising to see this breakout have a throwback to the line. So in summary, as we've talked about, the bull is alive and well and keeps showing no signs of weakening. The fifth wave just keeps extending. It is a little disconcerting that we're in the fifth wave of a fifth wave of a fifth wave, but that really doesn't mean anything until the price action tells us that we're about to roll over. So we'll keep a close eye on the price action. However, because we are so extended, you should be on the watch out for trouble and typically employ some tight stops. Sometime within the next year, we still expect to have a 5% or more pullback. But if the breakout above this range holds, then we could be looking for much higher prices after the pullback in the next year or two. Now, quick legal disclaimer. The contents of this video are strictly informational, and you should not construe anything I've said as being investment advice or an offer to buy or sell any security. You and only you are responsible for your investment decisions. And, of course, investment involves risks of loss. And as they always say, past performance does not indicate future profit. So, thanks for viewing. Good luck. And as I said, if you'd like more data, please come to my website, www.superchargedretirementIncome.com.